Hi everybody, welcome to DanTrades, this being the first video in what will hopefully be a series of videos centered around technical analysis and how to interrogate stocks based on price action via the charts. So the first topic that I'm going to cover today is support and resistance. Support and resistance being a key function of technical analysis. So what exactly is support and resistance? Well, support is when a price has dropped or declined to a particular level where buyers will then return to the market as they believe that the stock price is cheap again in an attempt or a bid to drive price up to a new level, obviously to try and attempt to make a profit. Resistance is conversely where price has risen to a level and the sellers have returned to the market to drive price back down. So in other words, there are key levels that we'll see in a moment or two on the charts where price arrives and the buyers tend to return to the markets. Similarly, there'll be a level where price has risen to where the sellers will return to the market, and the sellers will look at this particular level as price is sort of running out of steam. It's become a little bit too expensive, and therefore they believe that the price will go down, so they start to short the stock. And when they get to a particular level, they will obviously then take their profits, and the buyers probably return to the market and drive price back up. Now, price works in, I like to think of them as waves. So if you imagine a wave starting out at sea and it starts to get some energy behind it, so it starts to form a wave. That's when price is being driven up. So if you think of the energy being the volume, so the demand for the stock is getting higher, that increases the energy, the wave rises up, and then after a period of time it runs out of momentum and crashes down on the shore or the bay or the beach. And at that point, it is exactly like how a stock price moves. It has energy behind it, momentum behind it, it drives the price up. It gets to a point where it runs out of momentum and crashes back down to a particular level before it picks back up again and repeats. And it could be that price is being driven higher. You could have higher highs and higher lows, or it could be that price is being driven lower in the sense where we have lower highs and lower lows. Or of course, it could be in a ranging market where we have the price acting in a sideways formation, where price is having highs and lows, but really the price is held within a channel or a consolidation zone. So support and resistance occurs on every single stock. There's not one single stock where you'll find no support and resistance. This is exactly how price is driven at key levels of support and key levels of resistance. And it's really about whether price breaks through those levels as to whether or not it is driven higher or lower. And that's exactly how the stock prices are trending up or trending down. And it's a very useful aid in entering and exiting at key levels. And the reason that it is because at these key levels, you can enter at a particular level where there is less risk of a price being driven lower, if in the terms of a support channel or a historic support line that has been relied upon time and time again. And I'll show some examples of that in a moment or two. And similarly, when you want to exit, so if you wanted to exit a stock at a particular level because you've made, I don't know, 30, 40, 50% plus profit, whatever it may look like, you know that there is inbound resistance about to occur on that particular stock. So you know you're exiting at a lower risk where price might not drive that much higher than when you exit. So in other words, you're able to create a trading plan for every stock that you enter in future, because you'll know exactly where support comes in and where resistance is likely to occur. So we're going to go to our charts now. So this being Ridgecrest PLC, the ticker is RDGC. And I'll just quickly show what is meant by support and resistance. Now, I tend to draw what I call resistance bands. And the reason I draw resistance bands is, for me, yes, there are common wicks or lines that you can draw, but that isn't always the case of where price rises to and then immediately withdraws back. So on this particular resistance line here for Ridgecrest, which this is the IPO over here in the 5th of January 2021, so this year, earlier on. Price came in, it sort of dipped a little bit before it started to get a bit of momentum. It started the day way down here, which is a common level because you'll see that some of the wicks here, 1, 2, 3, 4, are at exactly the same opening price as this particular candle here. And then the bulls came in, drove the price right up. So that continued that nice trending up momentum pattern. It then trended up further. Bit of a resistance on that particular candle there. I mean, that's quite a bearish candle, but the price went all the way up to here, like 2.91, drove all the way back down to 2.11, which, you know, is a third really of that candle, and then gapped up the next day. So it went from here at closing up to here on the following day. So we had a gap here, which then correspondingly on the way back down was filled. And we'll talk about gaps in the coming videos as well. So back to resistance. So the first swing high here came up to a level of around about 3.6. So if we was to draw a resistance band here for Ridgecrest, somewhere along here, which gives you a relatively narrow band of resistance, but you'll see why I've drawn that in a moment now. You'll see that price came all the way up to here, and then the following candles drove price all the way back down to this level here, which is the first level of support. So at this line here, we saw our first line of support for Ridgecrest. So here we go. We'll draw a band in here because price basically returned back to its previous high. So as you'll see here, price driven all the way back up to 3.5 from down here at 1.720. You see it took a bit of time to get going, you know, out of 3 white soldiers, which is a bullish trading signal. Then it retracted back to retest the support line, and then we had some tight prices here where it closed at very, very similar levels, and that's normally a key sign that price is going to either be driven up or down as a consequence of those tight closes. But you also need volume with those as well. We've got a bit of volume going on here, not masses and masses. We've got a bit more volume on these days. This is the average. This red line here is the average 10. So that's 10 days of average volume. So you'll see here, obviously, that there was a big spike where price was driven down. That's a red day. So price went from this level here all the way down to where it closed here. So that's why it's shown as a red volume indicator. Green volume are up days, red down days. So back to support and resistance. As I say, this here is showing that there was a key level of support here where it rose back up. It retested that resistance band, but could get pushed no further. So on that particular day, price withdrew all the way back from 3.5 all the way down to 2.96. I mean, that in itself is a retracement of around about, what, 20-25% of a stock. It's quite a significant amount to be driven down on an intraday. So if you were sort of entering in this range here, you'd want to be looking to exit around about this resistance level here, because price is likely to just simply retest. And if you got an inclination that it was rejected at this level, which is exactly what happened, that's when you want to be withdrawn. I mean, that would be a cracking profit. I mean, if you entered at the top of these candles here, top of these wicks, let's say you even went over here somewhere. Let's say you entered at the top of this wick here, so 2.170, you're getting all the way up to 3.5 from roughly 2.1, 2.2 levels. So it's a big gain and a nice tidy profit on that particular example we've used there. But you can see when it got to the resistance level that again, price was driven all the way down here, Now, this candle here is very similar to the candle that we had over there. So you would be probably looking at that and saying, well, support's come back in, which is exactly why we have to look then for a bounce. It didn't bounce, it continued. We had a bit of a double bottom in progress there, because if you took the wick into account over here, you've got the first bottom and the second bottom here. They're at almost the same levels, not quite. But you did see price was starting to creep back up, and then we gapped all the way down here to 1.1, 1.2. So don't be so noble and bold as to turn around and say, well, it's going to go back up to this level. If, of course, your support has fell below the line, you've got to be patient, you've got to wait. And really, I would be expecting at this point here for it to go back above the support line for me to have the confidence that it will go back up to this resistance line. It didn't, it gapped down. In actual fact, what you're now seeing is you're seeing a new support band, which goes back to the IPO days. So here we're seeing from the sort of around here, the sort of 5th, 6th, 7th of January, being repeated over here, where we are now towards the back end of April. And this could be your double bottom. I'm not saying that it is, no financial advice, but I'm saying that this could potentially, and again, you've got to wait. This is tight price action here, and you've got a gap above. So if anything, you'd be expecting that gap to be filled at some point, whether it's in the near future or far across in the distance, who knows. But here you'll see that you've got support band, you've got a previous support band that was defeated, which is a bearish sign, and you've also got up here your current resistance band. So it could be that support becomes resistance. It could be that resistance becomes support in the future. This is exactly what happens with these bands, but they are key levels, and you'll see here that this is classified as one particular swing because this went from that particular level all the way up to the resistance level. This is your swing back down. Then price kind of consolidated for a short time, and then we had the next swing high over here, which was actually lower than the previous swing high, which isn't particularly going to build any confidence in this particular stock. And then we've basically swung all the way back down to the level we find ourselves at now, which is obviously a lower low. So if you were to look at this from a trending point of view, you would be saying this particular stock is either ranging because it's sort of going up and down and sideways, or it could even potentially be on a slight downtrend as price is closing lower than it did in his IPO days. So that's the first video that I'm going to show for you today. And it's based, as I say, on support and resistance. And as I say, the sort of key takeaways from this is, for me, support and resistance, yes, they do have common lines, but it's never a given as to exactly where those lines occur. Okay, there are bands, so I'm expecting price to sort of fall within these bands and give me an inclination as to whether it's going to rise or continue to fall, or vice versa. And this is exactly what we want to be looking for when we enter and exit stocks in the future. Hope that's given you a decent overview of support and resistance. We'll be going back over these things in future videos, but I hope you found this informative, and please like and subscribe for more video content. All the best. Cheers.